Intel just sold $20 billion of stock, its first public offering since 1971, and the market called it dilution. Plus 4 more stories moving the AI tape today. Let's get into it. Intel priced a $20 billion common stock offering Monday evening. 210 million shares at $95, upsized from a $15 billion base, with net proceeds near $19.7 billion. It is the first public share sale in Intel's history as a listed company, and it closes August 12th. The size is the story. That original $15 billion base was already 75% of Intel's roughly $20 billion projected TWS CapEx, meaning AI compute demand is now outrunning what cash flow can fund. Q2 revenue came in at $16.1 billion, up 25%, with data center and AI at $63 billion, up $9. The bear case, shares fell over Ford on the session because management sold equity after the stock roughly doubled year to date, and holders paid about $3 dilution for the privilege. The signal: if the next CapEx guide moves above $20 billion, this was demand-driven. If CapEx stays flat, it was balance sheet repair dressed as growth. Congress moved directly on the Frontier Labs Monday. House Democrats wrote to Speaker Mike Johnson asking him to compel the CEOs of OpenAI, Anthropic, and other Frontier Labs to testify, and Senator Bernie Sanders separately told OpenAI, Anthropic, and Meta to pause development outright, saying Congress would step in if they did not. Lawmakers want testimony on the failures and potential negligence behind last month's rogue model incidents. The previous phase of this story was voluntary disclosure. This phase is subpoena adjacent, and the AI kill switch bill, introduced in late July, now has a hearing pathway it did not have before. The bear case for the labs is not the pause, which has no legislative vehicle. It is the framing. Negligence, rather than accident, decides whether the eventual bill regulates deployment or regulates training. Watch for Republican co-sponsorship. If a hearing gets scheduled, the regulatory premium hits every financing story in this episode, Intel's raise included. Anthropic, Macquarie Asset Management, and Singapore's GIC formed Theseus Infrastructure, a platform that will develop, operate, and lease purpose-built data centers to Anthropic under long-term agreements. Macquarie and GIC own the vehicle and provide the majority of the equity for each project. Anthropic is the anchor tenant, not the owner. This is the move Meta made with BlackRock in El Paso, now executed at platform scale by a lab without hyperscaler cash flows. It follows Anthropic's $50 billion infrastructure plan, and Anthropic committed to pay 100% of grid upgrade costs and cover consumer electricity increases at these sites, a direct answer to the backlash running through Texas, Ohio, Florida, and Pennsylvania. The bear case. Off-balance sheet is not off the hook. Long-term leases are fixed obligations against revenue that does not exist yet. The signal: if OpenAI's next Stargate tranche copies this structure, the marginal buyer of compute is infrastructure capital, not technology. OpenAI is now arming defenders before attackers get there, and it put a number on how far behind defense actually is. The company expanded Daybreak, its gated program, handing unreleased frontier models to vetted defenders, and introduced GPT-5 on 6 Cyber. On complex offensive tasks, including exploit chain development, authentication bypass, and privilege escalation, the general-purpose SOL model completed 1 PAW. The Cyber model completed 9 PAW. Launch partners are Accenture, IBM, CrowdStrike, and Cloudflare, which means OpenAI is entering security as a supplier to the incumbents rather than around them, 2 weeks after freezing Astra over cyber risk ratings. The bear case: a model that clears 95% of offensive tasks now exists, and the only safety layer is a vetting list. That is precisely the capability Congress is preparing to subpoena executives about. The signal: If a daybreak red model is ever implicated in a real incident, gated distribution dies as a policy defense. Meta just gave away what Alibaba started charging for. Meta Superintelligence Labs released Muse Glimmer, a 30 billion parameter multimodal model under a permissive Apache 2.0 license, days after Alibaba began billing large commercial users for its so-called open weights. Glimmer pairs a 2 billion parameter perception encoder with a 28 billion parameter text decoder, quantized to roughly 4-bit with block-level speculative decoding, fast enough for always-on agent loops on a single 24-gigabyte consumer GPU with no network call. It is a real reversal after a year of Meta moving its best models behind proprietary terms, and it lands 5 days after the paid Muse Code Assistant. The strategy is legible: charge for the hosted coding agent, give away the on-device runtime. The bear case: free weights destroy pricing for anyone selling small model inference by the token. The signal? Watch Alibaba's pricing response within 2 weeks. One through line today: the AI build-out is being financed off balance sheet and legislated onto center stage in the same week. Intel sold equity. Anthropic sold the landlord role, and Congress asked for the CEOs under oath. Subscribe so you catch tomorrow's tape first. This has been the Daily Alpha.